Good evening, everyone. Welcome to today's webinar on UAE corporate tax laws. And thank you for taking time to join us. My name is Gopika, and with me, I have Mr. Feroz as well. So, we will be a presenter today. In the next 1 hour, we will simplify the tax laws in UAE for you. This will cover VAT, corporate tax, compliance, the regulatory responsibilities that every UAE-based businesses must understand. To start with, Flying Color Group has been supporting businesses in UAE for over 21 years. Uh, our group uh, our group spans from company formation, tax consultancy, accounting, compliance advisory, real estate, global citizenship services, and asset protection. So, our mission is simple. We provide clear, compliant, and practical solutions to help the businesses grow here in UAE. With VAT, corporate tax, and global transparency right now, businesses often require and they struggle to keep up. So this webinar is designed to break down the tax laws into specific topics that can help to stay you compliant. To start with, I'll just give you a quick agenda of today's webinar. So we'll start with VAT, corporate tax, free zone tax benefits. Then we have global reporting standards, local regulatory compliances, which will be taken by Mr. Feroz. So we have structured this session in a way that we give complete compliance overview. So by end of the session, you will walk away with, clarity on your tax responsibilities, how to avoid common penalties, how to structure your business to benefit from UAE's tax framework, and how to prepare for global and local reporting obligations here in UAE. So let's begin with VAT, one of the most fundamental tax we have in UAE. Discussing about VAT is like an indirect tax that we have, which is on the consumption of goods and services in UAE. If you see, the VAT rate is 5%. It is an indirect tax that applies on the consumption of goods and services. It was introduced in 1st January 2018, and it is governed by Federal Tax Authority. Every business, whether small or large, with VAT in some way and understanding its structure, it's crucial that you maintain and go ahead with the VAT compliance. Now, when we talk about VAT registration, it's based on turnover thresholds. If your taxable turnover exceeds 375,000 dirhams, the registration becomes mandatory. That's called a mandatory registration threshold. And if your business crosses 187,500 dirhams, then you are eligible for a registration. You can register anytime. It's an optional kind of registration. Mostly the startups, the SMEs tend to register on a voluntary basis to take out the maximum advantage of VAT on an early stage of business. Now, talking about VAT penalties, FTA imposes strict penalties on non-compliances. So a late VAT registration attracts a penalty of 10,000 dirhams. For VAT return filing, the first delay will cost you 1,000 dirhams, and subsequent delays in each quarter, it will cost you 2,000 each time. So these are easily avoidable if we, plan your VAT registration, return filings on a properly basis. Now, coming on to VAT return filing, once you're registered, businesses must file your VAT returns every quarter. Returns must be submitted within 28 days from end of each quarter. The return summarizes your taxable supplies, your input VAT, your net VAT payable, If the input VAT exceeds the output VAT, then you're eligible for a VAT refund. It's also important to maintain all VAT related documents for minimum 5 years. And if you're a real estate company, then it is mandatory for you to maintain the documents for next 15 years to comply with the VAT regulation. Now, VAT return filing. About VAT return filing, like I said, you have to file your returns every quarter within 28 days from the end of the quarter. Now, when we see VAT treatment, we have four groups which we can categorize VAT treatment. One, we have standard rated VAT, which is 5%, which most of the goods and services, when you buy from UAE, you can see on your invoices, it's 5%. Then we have zero rated. Mainly it comes into export of goods and services. If you are exporting your goods from UAE to any other country, then it will be a zero rated VAT. And if you're providing services to any outside country or international clients, in that case, it is zero rated. Now, specific sectors which have been listed down are like international transportation. For example, your flight tickets, those come under zero rated. Educational services. Educational services would be specifically on the ones who are approved by the authorities, like KDHA authority, the education authority of UAE. So in that case, it can be zero rated. Healthcare services, precious metals, wherein gold, diamond, all those things comes into place. The first supply of residential properties. So these are the special sectors where it comes under zero rated. Other than that, the export of goods and services will be also zero rated. And the next would be exempt supplies. In this, mainly three things comes. One is local transportation. For example, if you're paying to any RTA like your metro, your cab services here in UAE, all these local transportations come under exempt services. You're not paying out any VAT on that. Residential properties. So any residential property you purchase, it is under exempt supply. Certain financial services. So financial services in terms of, you're trading for yourself. These kind of financial services will come under exempt supplies. Next, coming on to out of scope transactions that are considered under out of scope of VAT is mainly if I'm a company in UAE and I'm purchasing from India and I'm selling in China, the goods are moving from India to China. It's not entering into UAE. So this is specifically out of scope supply. This does not come under, VAT treatment. But even if you're doing any one of these treatments under VAT, there are special cases as well under VAT where we have to sit and assess each transaction and come into a conclusion under what rate it will fall. So it's very important that you know that a proper tax consultant is taking it over. So that's about VAT. Now, moving on to corporate tax. Like everyone know, it's a hot topic now. It's like a direct tax on your net profit in the UAE. So it officially came into picture on June 2023. It's like a taxable profit on your business. If we talk about the registration is mandatory for all businesses in UAE, regardless of your activity, revenue, jurisdiction. Even a dormant holding entities, SPVs, must register and file for corporate tax. Corporate tax rate is like 9%. The corporate tax regime is very straightforward. If your net profits are up to 375,000 dirhams, it is 0%. If it exceeds this particular amount, then it will be taxed at 9%. Now, FTA requires every taxable person to maintain proper records, uh, whether it be audited financial statements, supporting documents to show your tax position. Under corporate tax, the businesses must maintain a proper accounting records as per IFRS. These records must be kept for at least 7 years as per the law. And for the companies that fall under transfer pricing rules, should maintain benchmarking reports, documentation that is essential to justify the related party transactions. Now, small business relief is for smaller companies who generates less than 3 million dirhams in revenue. The government offers them a small business relief wherein they can qualify under 0%. Even if their profits are exceeding 375,000 dirhams, they'll be paying zero tax to the government. So, however, if you're still under corporate, if you're still falling under small business relief, you have to register, you have to file your returns. That is mandatory. Talking about qualifying free zone person, this is an tax eligibility that is given by the ministry to the free zone company, especially because before there was no corporate tax, no taxation in UAE. So suddenly, when they came up with taxation, they have to come up with some relief to support the businesses, right? So this is eligibility where companies can avail 0% corporate tax. But to avail this, they have to satisfy certain conditions and they have to fall under specific category. So to start with the conditions, we can see the 5 major conditions that we have to satisfy as a qualifying free zone person. One is maintain economic substance in free zone. This can be in a form of that you have capital expenditure in the free zone, you have employees, you have decision making, you have physical substance, which can be office, that proves that this company is operated from the particular free zone that we are talking about, and this will create a substance for you. No election is taxed under standard rated. So when we are filing for a qualifying free zone person, we have to opt as a qualifying free zone entity during the return filings. If we go for standard, 9% filing, then our free zone election will be blocked for next 4 years. So we have to ensure that we choose this election in the first year itself. Complying with transfer pricing regulations, as said, if someone who is a qualifying free zone person wants this eligibility, if they're dealing with any related parties, connected person payments, they have to comply with transfer pricing rules. They need to maintain the benchmarking reports. Benchmarking reports is something wherein you take data from other similar businesses, other similar entities in UAE or worldwide, and compare and give you a range which shows that your price is not modified for your related parties. So we have to maintain this document as a qualifying free zone person. Audited financial statement. It goes without saying that a qualifying free zone has to maintain and submit their audited financial statement during their return filing. Meet the de minimis rule. De minimis is something. Now, when we see the next slide, there are qualifying activities listed down. So if I am doing one of the qualifying activities, example, suppose trading. Trading is one of the qualifying activity. Along with trading, if I do some non-qualifying activity, suppose consulting, I have 2 types of income. One is qualifying and one is not from the qualifying list. Then in that case, my non-qualifying income should not exceed 5% or 5 million of the total turnover. So if it exceeds, then my whole income will be taxable. So basically that is a de minimis rule. So your non-qualifying incomes should not exceed 5% or 5 million of the overall turnover if you're falling under qualifying free zone person. So these are the conditions which all the qualifying free zones have to fulfill. Now, who are these companies who can qualify for 0%? So these are the 13 to 14 activities which is listed by ministry. So we can go quickly run through it so you get an idea. First is manufacturing or processing of goods or materials. This can be done from any free zone. They should, fulfill or satisfy the conditions which we discussed previously, and it can be a qualifying free zone person. Trading of qualifying commodities. Qualifying commodities should be in a raw form. It should be recognized in a stock, exchange platform. It can be metals, minerals, oils, gas. These kind of commodities come under qualifying commodities. Holding of shares and securities. Even holding companies, these investment holdings, this can be also one of the qualifying activity if it is done from a free zone. Ownership, management, operation of ships. If you're doing this activity from a free zone, again, you're eligible for this. Reinsurance services, wealth and investment management services, headquarter services to related party, treasury and financing services to a related party, financing and leasing of aircraft, distribution of goods from a designated free zone. So distribution of goods is basically a trading activity where you buy and sell goods. So this particular activity, you have to do it from a designated free zone to be a qualifying free zone person. So this is one of the activities that you can, recollect. If you guys are from this industry, then you can look to it that you form a company or you plan to form a company in a designated free zone, so you get this qualification. And last but not the least, it's logistics services, which is one of the qualifying activities. So now moving on to the compliance part of this webinar, it will be taken by Mr. Feroz. So over to you, Feroz.
Hi, good afternoon, everyone. So, thank you, Gopika, giving the clarity on VAT and corporate tax, what are all the compliances to be taken care by the businesses in UAE. It is very important that, along with starting the business, to maintain the regulatory compliances as well. So, VAT, yes, VAT registration is required, VAT filings are required. When it comes to corporate tax, it's comparatively new because it is introduced from 1st June 2023, and it got practically in effect for most of the businesses from 1st January 2024. And in September 2025 was the month most of the companies' deadline for filing their first tax return. So the compliance is not ending by filing the tax return. From there, it actually starts maintaining the records, keeping the records, maintaining the transfer pricing documentation, checking the eligibility, whether they are eligible for 0% or not when it comes to free zone. Many more things are there. So I can see a few questions in the Q&A sessions, which at the end of the session, I'll try to answer as much as possible. And if any questions, if we are not able to answer, please feel free to reach out to us. We'll be more than happy to guide you on any particular scenario which you are facing. So, like from my side, what I'm taking here, it is like, certain other aspect of UAE, especially when it comes to the cross-border transaction, multinational entities, how they are going to deal with the taxation, what all the benefits they are having in the UAE. So we'll start with UAE tax residency. UAE tax residency, it's often misunderstood by many people that, yes, I hold an Emirates ID, then I'm a UAE tax resident. The answer is no. UAE tax residency is subject to certain conditions that is applicable for both businesses and individuals. And if they satisfy those conditions for that particular year they satisfied, they consider as a tax resident. Example, if you take an individual's case, an individual who is staying more than 6 months in UAE, that person is considered as a tax resident of UAE for that particular year. So you can think your situation like if you stayed 183 days in UAE in 2025, you considered as a tax resident of UAE. Why it is important for individual? It is very much important because UAE has no personal income tax. And if your tax residency is in any other foreign jurisdiction, example UK, European country, India, or any other country, then your global income will be taxable in that country. So it's not only about setting up your business or moving your wealth, moving your income to UAE. It is also equally important to understand what is the tax residency rule in UAE and what is the double taxation treaty talking about. So what is double taxation treaty? UAE has signed more than 130 tax treaties with different countries. And based on this tax treaty, the countries are agreeing that, okay, if you are like if someone is staying in your country, I'm not going to tax them. And there are so many other benefits also. So for individual, it is very important to understand that just because having Emirates ID, that is not giving the status of a tax resident. Yes, that is giving you the status of a resident to stay in the UAE. When it comes to companies are having like UAE is a hub for global business, and companies are having cross-border transactions, and many transactions are subject to withholding tax. Example, when you invoice from your UAE company to a Saudi company for professional management fees, let's say you invoice for 100 dirham. As per the Saudi local regulation, there is a 20% withholding tax on this 100 dirham. So what is going to happen? They are going to deduct 20 dirham and they are going to pay 80 dirhams to you. Now, UAE has signed a double tax treaty with KSA. And as per the double tax treaty, if a UAE company can prove that they are a tax resident of UAE, then Saudi will not hold this 20%. That means you are going to get the entire 100 dirhams to your bank account. To get the tax residency certificate, yes, there are conditions associated with that. As I told, for individual, it is 183 days. Then further digging down, there is tax residency eligibility based on the domestic tax rules, that if an individual who is staying more than 90 days in UAE, that person also considered as a tax resident as per the local regulation. Now, what is the difference between the 90 days criteria and 183 days criteria? 90 days, UAE government is accepting you as a tax resident. That does not mean that the other country will consider you as a non-tax resident. So there will be many situations I have come across that the business owners are people who keep traveling and they are not staying in any country more than 6 months. So for such people, it is very important that they are becoming tax resident in at least one of the country. If they are not tax resident anywhere in the world, what is going to happen is that their nationality where it is, that example, if that person is a UK national, and then that person's tax residency automatically go under his passport. So at that point of time, if that person is able to prove that I was a tax resident in UAE during the year 2025, and the tax residency certificate issued by the UAE tax authority based on the local regulation will give them a wall to talk to HMRC, which is UK tax authority. Now, moving to the next topic, which is global tax transparency and multinational. This is for big, giants in the business. So, as Ms. Gopika explained to you, there is 0% corporate tax in UAE, and for free zones, you will get 0% corporate tax, subject to satisfying certain condition. And if your revenue is below 375,000 dirhams, you will pay 0% corporate tax. And if your revenue is below 3 million dirhams, you can get the small business relief and pay no corporate tax. So this concept is with everyone's mind. UAE's tax rate is coming between 0 to 9%. Answer is no. UAE has one more tax rate, which is 15%, but that is applicable for multinational entities. Now, from where this concept is coming? The concept is coming from an organization called OECD, Organization of Economic Cooperation and Development. It's an organization where multiple countries are becoming part of it. Few countries are member countries, few countries are following countries, and they are cooperating each other to avoid the tax leak from their country. Now, they mainly made two pillars, pillar one, pillar two. Pillar one is mainly talking about shifting of profit from one country to another country. Then they come up with the concept of transfer pricing, all these things. It's a separate thing. Now, for our discussion, pillar two matters, the second pillar. What is pillar two is telling, if any country is adopting the pillar two concept and any multinational entities are operating inside that country, that company should pay minimum 15% taxes on their profit. It is not 9%. If I give an example to you, think Apple. Apple is operating in UAE. Of course, Apple is a multinational entity and they are operating in more than one country. That means, and one more, yeah, that is also very important. Like, in order to become multinational entity, there are two things mainly required to be satisfied. Condition number one, that the company is operating in more than one country. Condition number two, that company's global consolidated global turnover is exceeding 750 million euro, which is roughly is equal to 3.15 billion dirhams. If these two things are satisfied, instead that company is paying 9% corporate tax in UAE, that company will pay 15% corporate tax. It is coming with a different calculation, different set of rules, everything. It's actually not as easy as how we calculate corporate tax. It requires separate books to understand, the profit which is subject to 15% taxation. So UAE has a 15% tax also. Here comes a very valid and important question, that if a free zone company who is eligible for 0% corporate tax as per the UAE corporate tax law, as my colleague explained to you, subject to the condition, substance, audited financial statement, transfer pricing, yes, they are eligible for 0% corporate tax. But what if they are a multinational entity? Will they pay 0% corporate tax or 15% corporate tax? So the answer is they are going to pay 15% corporate tax, because UAE corporate tax law, the Pillar 2 regulation, which is the multinational Pillar 2 regulations, is going to override the UAE corporate tax law. So it is going to have an impact even if a free zone company which is eligible for 0%, if they fall under the definition of multinational entity with the revenue of 750 million euro and operating in more than one country, then they will pay 15% taxes on their profit. And the Pillar 2 taxes, which is called top-up tax, is implemented in UAE with effect from 1st January 2025. That means who were already part of multinational entity in the year 2024, they are not going to comply with the tax rules and pay the taxes. Everybody who is eligible to pay top-up tax, which is 15%, is coming under the regulation with effect from 1/1/2025. Now, country by country reporting, this is also again comes for the big business groups. As I explained to you, who is a multinational entity, the multinational entity operating in two countries, more than two countries, and having a global revenue of 3.15 billion dirhams. So these countries are having a requirement that they need to do a special report in UAE, which is called country by country reporting. So who should do this reporting? If any multinational companies are having headquarters in UAE, in that case, that parent company has the requirement to submit this CBCR report to the Ministry of Finance. So they have specified a deadline, the format, how to file. So each country's operations required to be reported. So Pillar 2, CBCR, these two things are coming for multinational entities. Now comes the next regulation, which is FATCA and CRS report. FATCA, of course, it is coming from the US, the US tax authorities regulation. CRS, which is called Common Reporting Standard, which is a global rule. Even CRS is coming from the same organization from where the Pillar 2 came, which is OECD, Organization of Economic Cooperation and Development. Like anytime when you go to open a bank account, be it your private bank account or your corporate bank account, you must be signed the FATCA form. So what FATCA form is asking, are you a US a citizen or US green card holder or a US resident. And the moment you tick yes, then the compliance questions will follow. But most of us will fill no, and then we will just sign and finish. The same goes for the corporates also. Like if you are from US, then when you sign your corporate bank account application form, the same question comes: Are you being an ultimate beneficial owner? Are you a US resident or passport holder or a green card holder? So that is the purpose, is mainly to understand that whether this person belongs to the US. In that case, that person's all transactions will be reported to the US IRS, their tax authority. Whereas how CRS is coming, CRS is again coming from the same concept of OECD, and they mainly focus on non-resident account. For example, if someone who opened a company in UAE and they have not taken any visa from that company, basically they do not hold the Emirates ID. And if they open a bank account, can they open a bank account without Emirates ID? The answer is yes, they can open a non-resident bank account. But these non-resident bank accounts are frequently getting reported under CRS to the home country. So it is very important when you start your business. It's not only about starting your business, you must make sure that you are securing your Emirates ID so that you do not fall under the CRS compliance. And when it comes to a company perspective, who should do the FATCA CRS reporting? Then in general, it is applicable for financial institution. So the financial institution, they classify banks, insurance, investment, and custodian. So they have a requirement to submit the FATCA CRS reporting on annual basis to Ministry of Finance. Sometimes being a business owner, you may have noticed that suddenly you are getting an email from Ministry of Finance to declare your FATCA CRS standard. So when you get this, what the authority is trying to understand, they are trying to understand, first thing, are you a financial institution? If the answer is no, then they want to understand, are you a passive income earning company or an active income earning company? How they have defined the passive income and active income, it depends on what you earn from your company. If your company is earning more than 50% passive income, like dividend, interest, royalty, then they will come under the passive income generating company. Whereas if you're more than 50% of your income is from the active business operation, like trading, consulting, manufacturing, any other operating business, then you come under the active business category. And the report you will submit to the Ministry of Finance, and Ministry of Finance evaluate it. And if they have any question, they're going to come back to you. So this is about FATCA and CRS reporting standard in UAE. Now comes the anti-money laundering regulations in UAE. So it's actually anti-money laundering. Of course, it has a big definition. It comprises multiple factors. It starts with the UBO compliance. Now, to understand that, many of you must have noticed that free zone. If you are a free zone company owner, your free zone is reaching out to you to fill the UBO compliance form. What they're trying to understand, who is the ultimate beneficial owner of the company. So if you own a company, how to define who is the ultimate beneficial owner? If there are 5 shareholders, who is the ultimate beneficial shareholder? If you have a corporate structure for your company, who is the ultimate beneficial owner? Basically, they want the individual behind the company. Now, how to define ultimate beneficial owner? Anyone who is holding more than 25% shares in a company, that person is typically considered as a UBO, ultimate beneficial owner. Let's think like a situation where there is a company and that company has 5 shareholders. Everybody is holding 20%. That means no one is holding more than 25%. How we will determine the UBO? We need to see who is controlling the company. So maybe the UBO can be the manager or director of the company. Or it can be even the senior management of the company. Neither the shareholder control the company nor the director control the company. Maybe the company's CEO, CFO, CEO, they will be controlling the company. So the definition of UBO is mainly who is the ultimate beneficial owner of the company, who are having the control. to by way of shares, by way of voting right. This all it need to be defined, like who is the UBO. Every company required to maintain their UBO register, and any changes in their UBO, it required to be updated. So free zones are sending you a format. In mainland, when you go to set up a company without submitting the UBO notification, we cannot set up a company. Whenever we want to change a shareholder, it is again going to the notary. You do the license amendment, change the memorandum, and submitting it to the Department of Economy and Tourism. So they are up to date about who is the ultimate beneficial owner. Whereas practically what we have seen in the market, that the free zone authorities, they are sending out emails to the companies and asking certain details. So one of the details they always ask is to submit the shareholder and UBO register. So always please keep in mind that shareholder is not is equal to UBO. Maybe there could be a situation if the person who is not a shareholder can also become a UBO. So being a business owner, you must make sure that you maintain your company's UBO register and keep updating as and when any things are changing. So it's not only about changing of owner in the company that the situation comes, the UBO register need to be updated. It can be a situation where the owner's contact details are changing, or owner's residential address is changing, owner's passport is getting renewed and passport number is changing, or Emirates ID renewed and the Emirates ID validity changed. So there are certain details required to be filled and kept, and make sure that we are doing it without fail, because Ministry of Economy is very stringent on the UBO compliance, and the penalties can shoot up to 100,000 dirham for not maintaining the UBO compliances in UAE. AML CFT regulation is a continuation of UBO, where in the UBO, primarily they are trying to understand who is the person behind the company. And AML CFT regulation is trying to understand that whether the businesses themselves getting into money laundering, or the customer of the business is using the company for doing money laundering. How to differentiate it? First of all, we need to understand that UAE went into the grey list, and every 6 months there is an organization called Financial Action Task Force, FATF. They prepare a list and they categorize the countries into green list, grey list, blacklist. Blacklist has not changed for a long time. It always remain with three countries, which is Iran, Myanmar, and North Korea. These three countries are there in the blacklist for a long time. And the second list is grey list. Currently, if I'm not wrong, somewhere 22 countries are there in the grey list. And every 6 months, FATF will review the list and will check the country. What have they done in the last 6 months when it comes to the anti-money laundering compliance? Accordingly, they will add countries and remove countries. So if a country is in a grey list, then it is very difficult for that country to do international trading, international banking, cross-border transaction. Everything will come under stake. So unfortunately, UAE went into the grey list. That is when UAE decided to bring a AML CFT law back in 2019. And AML CFT law was already there, which is applicable for financial institutions like banks and insurance companies. But what UAE government has done, that they categorize certain businesses and they name those businesses as DNFBP, which is designated non-financial business and professions, certain business activities. Why they choose certain business activities? These are the business activities where their customer can use the companies for doing money laundering. One classic example is real estate. So why real estate? It is very simple. Anyone can make their black money, or the dirty money into real estate property, easily convert it into property. So real estate business considered under DNFBP. Dealers in precious metal, of course, it is by default. We all know, like if someone has a black money, they can go buy diamond, gold. So those who are selling, they are getting exposed to the money laundering thing. And corporate service provider. Corporate service provider is basically someone who is representing for others, someone who is setting up the company for others, accounting and audit professionals. So these four companies they consider as DNFBP, and every business who are considered as DNFBP, they should mandatorily comply certain regulations. It starts with the moment they get the trade license. If you can think like, if you are falling in any of this list, let's take an example, real estate agent. If you are a real estate brokerage company, the moment you get your trade license, the first step what you need to do is register with central bank. So central bank has a separate department to handle the AML matters, which is called Financial Intelligence Unit, FIU. So with FIU, the company should register, and that every company will get a company ID. So that is the first step they have to do. And always the question is there, what is the deadline to register for this? There is no such deadline specified, because we can evaluate what are all the documents required. The documents required is trade license of the company, passport copy of the MLRO. We will discuss who is MLRO. So when these two documents are only required, that means from day one, the company can register for AML. Now, when they register for AML, the company should appoint a dedicated person to handle the anti-money laundering compliance. It can be a qualified person. It can be your outsourced partner. It can be some of your employee. There is no educational qualification. There is no experience specified by the authority. Only thing what the authority wants is that the person who is handling your anti-money laundering compliance is having enough knowledge to do his job. That is the only requirement authority is asking. So when we register with the AML authority, we need to make sure that we have we are appointed the compliance officer as well. Once the registration and appointment of compliance officer done, then the company should prepare a AML policy for the company, that how they are going to mitigate the AML risk in their business. So if I give an example to you, like being a company like, a corporate service provider and accounting audit professionals, we are also considered as a DNFBP. So we have a detailed AML policy. Our AML policy is very clear that we will not accept cash above 50,000 dirhams from any of the customer. So it can be different from business to business. It's not mandatory that everybody should follow the 50,000 rules. Some business can make it 100,000, or some business can tell that we will accept cash regardless of the amount, but we are going to do extra check who is paying high cash. So this AML policy and procedure required to be prepared, and every customer they are onboarding, they must screen the customer. So there are softwares, well-equipped softwares, which you just enter the name, nationality, passport number. You will get the history of a person, like, if the person is name is reflecting in a terrorist list, whether the person is a politically exposed person, or anywhere in the news, any adverse media has reported against the person. All these details will be coming. Based on the screening report, we need to define whether we need to onboard the client or not. There are certain situations we should onboard the client. There are certain situations we should reject the client. So that compliance need to be taken care. And all the records must be kept by the DNFBPs for a minimum period of 5 years. And every year, a third party should audit the AML compliance, that whether the company is doing everything properly or not. And there are other things mainly, which is like training. Like if you are a DNFBP, you yourself get trained. Your employee should know what is the AML policy of the company. So onboarding training is required, ongoing training is required. So there are a set of regulation when your business is falling under the definition of DNFBP, you need to follow. And penalties from relating to AML is starting from 50,000 dirhams, and it can go up to 10 million and 10 years of imprisonment. Depends on the seriousness of the money laundering or terrorist financing done by the business. So it need to be very careful. I'm sure like none of us are doing anything wrong. Only thing what we miss is to manage the compliance. We forgot, we were not aware that being a real estate broker or precious metal trading company, Nowadays, this is the common thing what I have seen. When someone open a DNFBP activity, when they go to banks are asking like, where is your company ID for AML? So they are inquiring of it and getting some service provider, getting the AML ID, submitting it to the bank, opening the bank account. And the business owners are not aware that it's not only about taking the ID, there is an ongoing compliance that they need to take care. That what I explained from the appointment of compliance officer, preparing the policy, doing the audit, screening, training. There are so many things associated with this. When the authority knocks the door for an audit and asks like, okay, show me the screening report, where is your policy? There the penalties start kicking, and it is penalties like 100,000, 200,000, 500,000. The penalties are very big when it comes to the AML regulation. So anyone who is into the DNFBP business, please make sure that you are handling the AML CFT compliance for your business, and you are compliant to an extent that none of the authority can penalize your business. Next topic what we want to discuss is on the wage protection system. So wage protection system is basically a payroll compliance. So in UAE, the authority wants to make sure that the employees are getting salary on time and employers are paying it on time. And in case tomorrow, if there is any conflict between employee and employer, then they will review the salary sheet, what is processed through this system, which is called wage protection system, and they will decide whether the the judgment is favorable to employee or employer, depends on whether the salary has been paid through WPS or not. When it comes to the scope, all mainland companies are coming under the scope of WPS. When it comes to free zone, there are only 2 free zones currently as on date coming under the WPS regulation. One is DMCC free zone, another one is JAFZA free zone. Now, how to process salary through WPS? Yes, when you open your license, you took your labor card, you started appointing employees. You are agreeing to your employees certain salary and you are writing a labor contract. And whatever salary you have mentioned in the labor contract, that amount required to be processed through WPS system. If you have a bank account for your company and your employees are also having bank account, you can contact your bank relationship manager and ask them, I want to activate the WPS account inside my bank. If let's say in the situation where you don't have a bank account for your company or your employees are not having bank account, there are money exchanges like Lulu Exchange, Al Ansari Exchange. They are facilitating the salary process through WPS. And non-compliance in WPS is also, the penalty is very high, and they will block the labor card of the company. And at the time when we try to renew the visa, cancel the visa, or take a new visa, the error will show that the salary has not processed and your labor card is blocked. And per employee per month, the authority will penalize if the salary is not processed through WPS. Now, moving to the corporate governance compliance. So this is coming from commercial company law. All the companies formed in UAE, which is a limited liability company or a public joint stock company, they are falling under the law, which is like commercial company law. Commercial company law keep updating. The latest update, if I remember correctly, it came in 2021 or 2022. I don't remember exactly. So they are very specifically told that the companies are required to be done annual general assembly meeting, and they need to record whatever they have decided. So in UAE, it is a common practice that a lot of companies are having single owner, like one owner, he is only the manager. And this question we often get, like, what meeting we will do with ourselves? And whenever they make any major decision, or let's say they want to pass a shareholders resolution. So is that the resolution they are only sitting, they are only making, they are only passing it? But of course, compliance is compliance. We have to maintain it. And the companies are required to do the annual general assembly meeting once in a year. And once their financial year ended, it is recommended to do within 3 months. There are certain points which must be discussed on the annual general assembly meeting. Example, who is the auditor for the next year, and second thing, like how the business was performing, what is the business plan, is there any dividends are declaring to the owner, and it required to be documented. And it is very important for the substance also, because when you are talking, like you are a UAE business and you are having presence in UAE, you have not decided anything relating to your business from UAE. That means like you are not physically present in UAE, especially when it comes to the free zones and all. One of the conditions is to maintain the substance. And every business, it is very important that like it's not only UAE is giving a lot of tax benefits, but the other countries are watching you, that the moment you are non-compliant, then they can impose tax on your UAE profit. So they always see, just because you have a trade license in UAE, that is not giving protection for you from the foreign tax authorities. They always see from where the key managerial decisions of the businesses are taken. One of the key things what they always see is the General Assembly meeting, the shareholders resolution, the board resolutions. So we need to make sure that the compliances of annual General Assembly meetings are taken care. Now, when it comes to UAE, of course, there is generally day-to-day basis, there are certain things required to be handled. One is like records. So any business who is having operations in UAE, or they have a trade license in UAE, they have to keep their records. Different laws are telling different timelines. Now, if I give an example, VAT law is telling that all the records must be maintained for a period of 5 years. Corporate tax law is telling that all the records must be maintained for a period of 8 years, the current year plus 7 years. Anti-money laundering law is telling that all the records must be kept for 5 years. If the records are related to the real estate properties, the records must be maintained for 15 years. So in the years are changing, but the common thing everywhere it is that the records must be maintained. So if you're having a business, it doesn't matter whether you are keeping it as hard copy or soft copy, but please make sure that you are always audit ready, and any authority is asking any documents. Authority may ask, may not ask, but you may be facing problems in the banking side. So please make sure that the documents are kept for be it hard copy or soft copy. Your documents are always available for inspection. Accounting, every company need to maintain the books of accounts. Before in UAE, there were no taxes, so nobody was bothered like how much a company is making. Now that is not the situation. There is now UAE has taxes, so of course the authority is concerned about tax collection from all the taxes, like be it VAT, corporate tax, or excise tax. Everything starts with your accounting things. What you are doing, what is your sales, what is your purchase, what is your expense, what is your profit. UAE is following accounting standard, which is IFRS. So IFRS further they have simplified. If you're a small company who is making below 50 million dirhams in a year, you can follow a simplified version of IFRS, which is International Financial Reporting Standard. So they made IFRS for SME, which is small and medium enterprises, and that can be followed by the businesses whose annual revenue is below 50 million dirhams. The businesses whose revenue is above 50 million dirhams, they must comply with the full IFRS standard. Moving to the next compliance, which is auditing. Auditing are also having a different aspect. Example, if a free zone company, when they go for annual renewal, some free zone authorities are asking to submit the previous year's audited financial statement. Some free zones are asking, give us the undertaking letter that you will do the audit, and when we want, you will submit it. Some free zones are not asking during the renewal. They have kept a deadline that within this day, you need to submit the audited financial statement. If I give an example, DMCC has a deadline of 30th June every year. The company should submit the audited financial statement for the previous period. Medan Free Zone, sometimes they are asking declaration, sometimes they are asking to submit the audited financial statement. IFZA, recently they come up with the announcement that if a company whose revenue is below 3 million dirhams, they don't need to submit the audited financial statement. Above 3 million, they need to submit the audited financial statement. There are some free zones, also mainland authority, they are not asking the audited financial statement. When it comes to the tax compliance, for corporate tax law, they're very specifically told if a company who is making above 15 million dirhams, they must submit the audited financial statement. And as my colleague explained to you, one of the conditions to get a 0% corporate tax in free zone is to prepare the audited financial statement. So this is a regulatory side, but apart from that, it is always good to have your audited financial statement to submit to your bank so that your bank is more giving belief on your business activity because an auditor is signed your financial records. So that's all. I mean, pretty much we are at the end of the webinar. Now, what we are doing, which is already you got a clarity like what we are into. We can set up your from your business journey starting with your setup. Then once you set up your business, obtaining your visa, corporate bank account, and maintaining your books of accounts, taxation, audits, and compliances, be it AML compliance, UBO compliance, your free zone compliance, or your general assembly meeting, corporate governance. So as a group, Flying Color is providing a one-stop solution to our customers last 21 years. And it's very important for business to understand the regulations, not to just set up a business. Before setting up, every business should have this questions in their mind that what compliance I need to take care in the country. UAE is very lenient and very business-friendly country, but ignorance of law can end up in paying big penalty, cancellation of your license, and other legal complications. So once again, thank you, everyone. I will now take the questions from the Q&A session, and I'll answer as much as possible. Just to give an idea to you, we will be continuing this webinar session in the coming months as well. We are having a planner for the webinar for coming 1 year. And as everybody knows, like UAE is migrating to e-invoicing, it is very important to understand the e-invoicing regulations in UAE. Now, what businesses are doing, preparing the invoices from their accounting software or preparing it in Excel, that is not going to work anymore. There should be a structured way of making invoice, and whatever invoice you are making, it will be real-time reported to the authority, and authority knows what you are doing in terms of business. So I cannot give a 2 minutes explanation on e-invoicing. So next webinar in the month of December, we will be having a 1.5 hour discussion about e-invoicing. Just to give an idea, please don't keep in mind that I'm not VAT registered, so I don't need to comply with e-invoicing. E-invoicing is mandatory for all businesses in UAE. In next webinar, we're going to detail discussion on e-invoicing thing. And looking forward, to meet everyone. Now I will take up the questions. I have a question from Sarah. Where do you register to get qualifying free zone person status? So qualifying free zone status, we don't need to register. The authority has specified certain conditions. If you satisfy those conditions, when you file your tax return, you need to elect that, yes, I am satisfying all the conditions and I am eligible for 0% corporate tax. Will authority object it? Primarily, no. Whatever you are submitting, the authority will accept. But if they have any question, they can come back with their questions, or they can come back with the audit, and that could be the situation. So there is no registration for qualifying free zone status. It is an election as long as you are eligible. What is non-qualifying income? So if we are talking in a layman language, qualifying income is the income which is eligible for 0%. Non-qualifying income is the income which is not eligible for 0%. So if you remember, my colleague shown you a list of activities. If a free zone company who is dealing with outside UAE clients, there are 14 activities which are eligible for 0% tax. If a company who is making any income outside the free zone area or outside the free zone, not from these 14 activities, that income is not eligible for 0% tax. That incomes are calling generally non-qualifying income. Invoicing is B2B or B2C as well. So UAE is introducing e-invoicing in say this thing like phases. Phase 1 will be applicable for big companies whose annual turnover is more than 50 million dirhams, and phase 2 will be for companies who are revenues below 50 million dirhams. B2C transactions currently they kept outside the e-invoicing scope. The reason is that, like, implementing e-invoicing is not an easy task for any government. If we see our neighbor country KSA, they introduced or implemented e-invoicing in 24 phases, and still they are having their own issues. Certain countries announced e-invoicing and they postponed 5 times, 7 times. So UA is doing, like, in 2 phases. It will be more challenging. So they have kept B2C for the time being outside the e-invoicing framework, but in future they may bring it. How do we determine whether transaction is considered as related party for corporate tax? So, I mean, the concept is very simple. Like, the UAE government or UAE tax authority is giving you a 0% tax. Now, if you have a company outside UAE or inside UAE, which is paying taxes, and you control both the companies, then everyone's like a common man's thinking is like, let me book my maximum profit in free zone company where I will pay 9% tax. This even authority knows. And as you know that UAE has no personal income tax. So every second business owner whom I'm talking, they have a straightforward way of saving taxes that I will take entire profit as salary. This also even the authority knows. So they're not against a related party transaction or a owner's salary, but they are telling that you need to document it. You need to make sure that you are dealing on a market standard. So related party is a big topic. Of course, the person who asked question can reach out. We can discuss if you are facing any practical situation. When will be the Pillar 2 rules applicable in the UAE? So Pillar 2 rules are already up and running in UAE with effect from 1/1/2025. And the first filing of Pillar 2 will happen in 2026. And as I explained, this is not for all the companies. This is for the companies who are considered as multinational entities. Do all mainland companies need to have their accounts audited? If you're talking from a corporate tax perspective, it's required to be audited if the turnover is above 50 million dirhams. But generally, when you go for a license renewal or Department of Economy and Tourism (DET), which is the regulating the the mainland licenses, they are not asking the audited financial statement to submit. But for corporate tax purpose, yes, it is above 50 million dirhams required to be complied with the audit requirement. Are the directors are required to be paid through WPS? It just depends on what sort of visa you are holding. If you are holding employment visa, there are situations we have come across. 100% shareholder has taken employment visa from the company. So the person, even if the person is a shareholder, depends on the visa. If the person has having a employment visa, that means the person is registered with Ministry of Labor when it comes to the mainland company. So if the person is registered for Ministry of Labor, the salary must be processed through WPS, regardless the person is the owner or director. It is depends on the visa status and the labor card status. Is audited financial statement compulsory for DMCC and JAFZA registered companies? If the question is relating to corporate tax, then for the mainland company, what I have answered is above 50 million dirhams. So if a DMCC or JAFZA company turnover is above 50 million dirhams, then audited financial statements are mandatory to be submitted. Second thing, if you are a DMCC company or JAFZA company who is eligible for 0% corporate tax, regardless of your turnover, one of the requirement to get 0% corporate tax is audited financial statement. From a regulatory authority point of view, DMCC has a requirement that the audited financial statement must be submitted within 6 months from the end of financial year. So even if you see in 2025, the deadline was 30th June 2025 for for the audit report submission for the year 2024. Eventually, they gave a relief and extended it to September 2025. But September was the last. The same way, JAVSA also has a requirement to submit the audited financial statement. Can AGM be held virtually? Of course, it can be held virtually, but all AGM, if it is done virtually, without the presence in UAE, then the UAE company will become a shell company sort of thing, like, without proper presence in the country. So it's not that it is not possible, it is possible, but at the same time, always doing the virtual AGM will, abolish the substance requirement. Will free zone still benefit from 0% under Pillar 2? This point, I believe I explained to you. If a company who is a Pillar 2 company, means who is paying 15% corporate tax, even if they are eligible for 0% taxes, they're going to pay 15% tax. What are the most common misinterpretations companies are making when assessing whether they are rely on transitional CBCR safe harbor? So CBCR safe harbor rule, we need to, it's a big topic to discuss, to be honest. Like, there are certain safe harbor rules that the authority is giving. If you are falling in the CBCR regulation, still they are giving some sort of relaxation subject to the condition. So the questions I can take to you on a personal note. I'll get back to you on these things because it required a lot of explanation. What are the typical red flags authorities look into AML inspection? So when it comes to AML inspection, the question will start with interviewing the compliance officer. First, the authority want to know whether the driver know how to, is the person know how to drive a car. So first, they're going to meet the compliance officer, whether the compliance officer know the subject matter or not. If they feel like, okay, the person knows the things, then they start asking the questions like, okay, show me your document. How many deals you have closed in the year 2025? If it is 50, then they randomly pick 10 files. Show me the files of the client. Do you have the KYC? Do you have the screening report? Do you have done the enhanced due diligence in certain cases? Then they can talk to the employees. Have you got training regarding AML? Then they can check the audited financial statement, not the financial statement, sorry for that, AML audit report. Every company should do annual AML audit. So they can pretty much ask any sort of documents, and depends on which one is missing, the penalty will start kicking. I have 35 more questions I can see. I will review all this question and I will come back to you. I know, most of the people joined, many people I know in person who are our, valuable existing clients. Many people have joined. Even if I will have your email address, mobile number, which you are used for registration, I can reach out to you, or you can reach out to me at any point of time to clarify your question. Because the time has exceeded, we told 1 hour, we are all exceeded that time, and I think this is the right time, and you should have a very good evening and a weekend, which is going to start on a Friday evening. And for sure, we are going to continue this series of webinar. As I promised to you, the next webinar will be on the e-invoicing, and hopefully we'll look forward to meet each and everyone and more people in December session. The date and time, everything, the invitation will be sent to all of you separately. Thank you so much for joining in this, and looking forward.